After last Friday's jobs report, Bitcoin showed sharp volatility. It spiked quickly to 113K, raising expectations for further upside. But then it dropped straight down to 110K, liquidating both longs and shorts and leaving traders confused. In this video, I'll cut through the noise and share a detailed, intuitive analysis of Bitcoin's next direction from the perspective of a top trader. Stay focused and watch until the end. It will help you gain clarity in setting your direction. What's up, y'all? JC here. Bitcoin has been moving up and down again, creating confusion for many traders. And today I'll break down the current chart from a top trader's perspective. But before we get started, I'd appreciate it if you could take a second to hit subscribe and like, because it really helps me keep creating this content. And as usual, I'll start with the conclusion. I still maintain a bearish view on the bigger picture. And of course, I'll share the reasoning behind it from three angles: macro, TA, and market psychology. So first, macro. Let's start with the ETF flows. So the Bitcoin ETFs, it was showing inflows for 2 days at the start of the month, but quickly flipped back to outflows. And even BlackRock showed net outflows on Friday. Ethereum looks even worse. So ETH ETF has now seen 5 consecutive days of net outflows, and Friday also saw heavy outflows driven by BlackRock selling. And that's important because BlackRock often buys when others are selling, but now they are the ones driving the selling. And on top of that, Friday's jobs report was a huge disappointment. US non-farm payrolls came in extremely weak. Now a rate cut in September is seen as a given. And even the possibility of a 50 basis point cut is on the table. So we all know that rate cuts add liquidity. So you might think that's bullish for Bitcoin over the long run. And that's true, but here's the flip side. So weak jobs means weak economy, and that's bad for corporate earnings, and it stirs up the risk-off sentiment in the market. So if this week's inflation data, the CPI and PPI, come in above expectations, the market could easily dump on a short-term panic sell. The second reason I maintain a bearish view is in the TA. This part I covered in detail in my last video, so let's just quickly recap. On Bitcoin weekly chart, it printed 3 consecutive red candles, each one larger than the last. And in technical analysis, this is known as the 3 black crows pattern. And here with 3 black crows pattern, it signals strong bearish momentum building. And the last time we saw a 3 black crows pattern on the weekly chart was in April 2022. Back then, the market also faced significant downward pressure afterwards. And the bearish trend often flips once price clears the open of the third candle. For example, in November 2019, once Bitcoin pushed above the third candle in the 3 black crows, the trend shifted. And finally, the third reason, the market psychology. And this is the most important part, so pay close attention. On a Bitcoin 4-hour chart, look at the support box formed around the recent lows. This zone has held 3 times already. So this created a very strong psychological support here. And that leaves us with 2 possible scenarios. 1, the market makers accumulate here and send the market higher, or they intentionally break this level to absorb liquidity before reversing upward. And I lean to the second. Because we've seen multiple supports here, retail had plenty of time to load up on longs here. Of course, not 100% of the time, but usually when a real bottom forms, we tend to see a V-shaped bounce with no chance to enter. For example, here in June 2025, at 98K, a V-shaped bounce. But this time we've had extended sideways actions, which means not just institutions, but also a lot of retail longs are sitting here. And this is actually a pretty common setup. So late last year to early this year, after holding support a few times, we saw some short rebounds, but right after, the downtrend finally broke the range before reversing. And back to the current chart. So most retail stop losses seems pretty obvious, right under the recent swing low. So the market makers are more likely to push price through that level, take out liquidity and trap late shorts, and then fuel the reversal. And that means the break of this box could actually become a great buying opportunity. Of course, it could dump straight away or first push price higher, then come down. Both are possible. This is exactly the same scenario I explained in my previous video, adding shorts up to 117k level. So that's why I'm still holding my shorts even though price bounced up a little bit, and I plan to switch to longs once the box breaks. And how far it goes after the break, no one knows, and trying to call that now is pointless. The only realistic approach is to have these scenarios prepared and monitor how things play out. So to quickly summarize today's video, number one, macro flows look weak. Both Bitcoin and Ethereum ETFs keep bleeding out. Friday's jobs report shook the market, which leaves us in a fragile setup where even a small upside surprise in this week's CPI and PPI could trigger panic selling. 2. Technical analysis. August monthly candle closed red, sweeping the prior month's upper wick before closing down, along with the 3 black crows pattern on the weekly and daily charts, and they all point to the downside momentum. For a real reversal, we would need to see a close above 113.5k, which is the open of this third red candle on a 3 black crows pattern. And until then, the bearish view stands. And 3, market psychology. So the support box at recent lows has been tested multiple times, giving retail traders plenty of long entries. And that makes it more likely for market makers to break it first and absorb liquidity and then reverse higher. And I'll look to switch longs once that happens, but still I can't say where exactly the long entry will be. That's why I'll continue to monitor, analyze, and update you along the way. And quickly, just one last note. I am a long-term Bitcoin bull for sure. As I said previously, I've been consistently accumulating spot Bitcoin and will continue to do so. The analysis I'm sharing here is for short to midterm leveraged futures trading, so I try to stay as objective as possible, both long and short. And just to be clear, I'm not trying to get rich off shorts. In the end, I do believe the real money is made on the long side, so take this analysis as just a reference. If you're just a spot trader or if you just don't want to short, you don't have to. Waiting for the long setup is also a valid strategy. It's definitely your choice. And yeah, that's it for today's video, and if you found the analysis helpful, don't forget to subscribe and like. It really helps me keep creating this content. And as always, I'll keep sharing my best insights with full confidence. Let's survive this market together and see you in the next one.